Welcome back, dear traders. Today, the Federal Open Market Committee is finishing its two-day policy meeting. Apart from the widely anticipated rate hike, the regulator is expected to shed light on further policy moves. So, market participants have a lot of food for thought. For a start, let's wrap up the results of yesterday's New York session. Major Wall Street indexes closed in the red. The Dow Jones shed 0.7%, the Nasdaq closed 1.9% down, and the S&P 500 lost 1.2% to close at 3,921 points. The indexes regained yesterday's losses in the pre-market. The S&P 500 is expected to trade in the corridor between 3,860 and 4,020 points today. Investor sentiment was dampened by Walmart's quarterly report. After the stock market closed, some top American companies reported upbeat financial results, which improved market sentiment in the pre-market. Revenues of Microsoft and Alphabet fell short of expectations, but they were not as dismal as the flash estimates. Microsoft shares rose 3.8% in the pre-market after the company had said that it projected two-digit revenue growth this fiscal year thanks to growing demand for cloud computing. Alphabet shares jumped 3.5% because of a higher-than-expected sales in Google's search advertisement. Stocks of other high-tech giants, including Amazon, Meta, Tesla, and Apple, also traded higher in the pre-market. PayPal shares surged 5.7% as the company said in its statement that Elliott Investment Management is buying a stake in the fintech giant. The investor activist aims to encourage the company to slash spending. Amid such news, the stock market is getting traction, though the highlight of the day is the outcome of the Fed's policy meeting. The U.S. Central Bank is widely expected to announce a rate hike by another 75 basis points. So, investors will look for clues for further policy moves. The market is looking forward to remarks by Fed Chairman Jerome Powell. If the policymaker does not scare investors with an outsized rate hike, the equity market is likely to extend its growth. The US dollar index is drifting lower away from its 20-year high ahead of the Fed's policy decision. The index is hovering at around 107 points. Its intraday corridor is seen between 106.80 and 107.60. Judging by sluggish moves of the US dollar's index, it's clear that the market has already priced in the Fed's rate hike. Hence, investors are anticipating the first estimate of the US GDP for the second quarter. Until then, the US dollar is taking a pause. If the regulator's decision matches market expectations and the policy statement does not spring surprises, the greenback could slip again. Indeed, the market expects the Fed to ease the pace of rate hikes after today's increase of 75 basis points. However, the GDP data could confirm or dispel recession fears. Today, market participants got to know new evidence of the resilience of the U.S. economy. The actual reading surpassed the forecast for a 0.5% increase. It means that businesses have plans for big spending despite rising interest rates and soaring inflation. Except for transport, new orders grew 0.3%. Excluding the defense industry, new orders climbed 0.4%. Orders of transport equipment logged the biggest growth of 5.1%. The USD CAD pair is trading sideways at around 1.2870. The currency pair is likely to trade between 1.2830 and 1.2920 today. The loonie owes its strength to the soft US dollar ahead of the Fed's decision and the perfect storm in the energy market. Commodity prices rallied because the gas flow via Nord Stream 1 shrank to 14.4 million kilowatt per hour, which is twice lower from 28 million a day earlier. The current flow accounts for 40% of the normal capacity. In consequence, Brent crude jumped 0.8% to trade at $105.99 a barrel, and WTI surged 1.05% to trade at $95.77 a barrel. At the same time, gas futures linked to TTF, Europe's wholesale gas price, skyrocketed 11% to trade at 222 euros per megawatt hour. On the back of the full-blown gas war and energy crisis, analysts are warning about a recession in the Eurozone. Goldman Sachs foresees this possibility in the second half of the year. The crypto market is gaining ground today, proving its correlation with the high-tech exposed Nasdaq. Bitcoin began an upward correction and climbed above 21,000. The token has touched the resistance of 21,500 for the moment of recording this video. If the crypto manages to overcome this level and the Fed does not ruin the risk-on mood, Bitcoin will be able to recover to $22,300 today. Otherwise, the crypto will retreat to $20,500. One thing is certain, Wall Street is going to trade on the high volatility today, and market sentiment will depend on a variety of factors. Trade prudently and enter the market at the appropriate time. See you tomorrow.